Welcome to Market Movers, where we identify market moving headlines and then discuss ways to hedge risk or create exposure to affected assets. We have Scott Martin.
Hi, Jim.
So, Scott, okay, we have a huge Jackson Hole speech tomorrow from Jay Powell. He's talked about a new way for the Fed to look at inflation. The market seems that's dovish. Is the market reading it right?
Yes, I believe they are, Jim. I think the market is reading it more specifically as that means more Fed help. That means more liquidity. That means more stimulus. That means more effort to get the economy going in order to get inflation going, which in reality is actually good for stocks, especially early cycle inflation. So that's why I believe the market is somewhat taking those comments relatively well.
Amen. I think they should take it as dovish. I think it's a sign of frustration that they really can't get the inflation that they want. We'll see what happens. So our goal here on Market Movers is to provide different ways to hedge risk or express a directional opinion across specific time frames or in accordance with different risk tolerance. Today, Scott's going to be looking at ES options, and I'm going to be looking at the micro contract. Scott.
Yeah, Jim, just looking at how the market has performed over the last several weeks and months, I believe that things are just getting a little bit overdone. We're getting a lot of expectation of stimulus, as you mentioned, a lot of expectations of maybe inflation returning, and it just feels like the market is overly bid here and overly anticipatory. So, in my mind, just given that I've used futures and options over the course of the year to hedge a lot of my positions out that I may have as just outright longs, I found an interesting trade expression that I wanted to share with you. Specifically, Jim, looking at the week one, 3,400 33.50 put spread in the ES. It expires September 4th and it risks approximately $350. It's cost 7 ticks, risks 350 to make a potential 2150. And as I mentioned, it expires next week, but it gives me a little bit of protection going into a big week of economic data, including the non-farm payrolls report, with a little bit of a hedge protection on some of the other long positions I have in ES stocks.
I really like this trade quite a bit, particularly as a hedge. When you priced it, I actually thought it might be priced wrong, so I had to look it up to make sure because it seemed inexpensive. That's like approximately an 8-to-1 risk reward there. So it's 50 ticks away from where the market is. The market's at 34.50 right now, 3,450 ticks below. The market is telling us that that's a lot. To me, it didn't seem like that much. I think that's a good trade. I'm a bull still, and I'm looking at the micros, and I'm a buyer at 34.50. I've actually already put this on with a target of 35.50 and a stop place below 33.90. So me, you were talking about a hedge with your option. To me, I'm just the trend. The trend is in our favor. The trend keeps moving higher, so I want to be part of it. Thoughts?
Yeah, it's not a bad position to express yourself in. The only thing that I've seen this year and over the last couple of years as the markets have gotten extended either high or low is when option prices, as you mentioned, in the case of, say, my expression of that 8-to-1 almost risk reward ratio, when things get that extended, that's when I like to take advantage of them one way or the other. So even though that put spread that I expressed may not totally fill out by September 4th, the cost of it is so attractive that even if it moves a little bit in my favor, I can take it off and make a little bit of profit.
Okay, tomorrow, Thursday, we have the GDP numbers coming out. We still, in the future, we're looking more and more at elections. We're talking about reopenings. Of those three things, what's the most important? Is GDP the most immediately important?
I think it's still the reopenings, and I think it's the progressions too, Jim, that we have in the treatments, the therapeutics, or the vaccines. And these are all information pieces that the market is tending to take better and better as we get better and better news. And therefore, as that comes in, I believe that's how the market is going to digest it.
Okay, this Sunday night, the August 30th, is the launch of the CME's options on micro S&Ps and on micro Nasdaq. Scott and I have talked about these a lot. We plan on using them to add some precision to our trades. I'm pretty fired up about them. I know Scott is too. Thank you for joining us on Market Movers, where we are helping to make you a better trader.